Good afternoon and welcome to today's charts of the day. We like to go back and forth between looking at the equal weight of the Nasdaq, which I have here with the QQEW, and the regular Nasdaq itself. Most of the time the charts are very similar, but sometimes there's a lot to learn from the pattern by what the equal weight version is doing. For instance, this fifth wave extending up, the alt fifth of intermediate 5 of primary wave 3, to get a new high over this previous August, September, October high in the markets, was first showing up in QQEW before it dragged the regular Nasdaq with it. Similarly, as you can tell here, the third that ends up being our minor degree wave 3 actually topped in August, and when September, October was making new highs for some of those other indexes, the equal weight version was already starting to show some divergence. So off of the recent high, the equal weight has been diverging, and it has a more clear 5 waves down trying to complete for this just very initial move off of the high. Going back to the daily version though, since we're expecting a larger ABC move for all of the primary degree wave 4, we don't necessarily need to start this with only a 5-wave move, because most of the time your larger A wave is going to itself be an ABC move, which we can see something similar to this. And then as we zoom in on that, most of the time that A wave is also likely to be an ABC move. But with either whether this is completing 5 waves down as an A wave, or maybe it's going to try and stretch a little bit more, possibly towards the 200-day moving average as an A, B, and a C wave, we should be due for a decent bounce soon as a B wave. Now, if this is 5 waves down, the bounce should be a little bit less aggressive and only getting to about the 65 region before setting up a strong C wave down again for the rest of that A wave. So that we're looking for some initial support to start showing us. If we start to drop down strong again tomorrow, then there's a good chance that this can extend. But I thought the rest of the charts that we'd covered today, we'd go ahead and take a look at the things that are unequal in the regular Nasdaq, and namely those are mostly the FAANG names, although possibly Microsoft and Intel as well. Facebook has a very different count. At a large degree, we have 5 waves up completing off of the 2012 low. For its very initial move after it had that cowabunga IPO pattern, dropping down to roughly 50% of where it started to come onto the exchange, then got an initial 5 up and 3 down after that. So this should be a pretty significant top for the next couple of years in Facebook. Maybe it tries to get another extension to 247. And it's possible, though, that the A, B, and a C wave down, particularly if it stretches below 84 or below 85 and into the 70, 60 region, even more so, could be all of a corrective retrace at the same primary degree. But normal retrace, at a cycle degree in line with a lot of the things that look like a cycle degree wave 3 top and are looking for a wave 4, that primary degree correction as the intermediate ABC should probably just be the primary degree A wave and get another B and a C wave when the rest of the market is starting the primary wave 5. But more pertinent to current trading is the fact that this looks like we have a completing ABC move up for the B wave. Like many stocks, though, this only has 3 waves off the high. So as we saw, the equal weight looks like a clear 5 waves down. This looks more like just an ABC so far. It could certainly stretch into more of a third and then get a 4th and a 5th. But if we examine the fib extensions that we expect for a for a C wave, we can see that would probably, if it got more of a 3, 4, 5, that could easily be all of wave 1. But what I think I've mentioned on a number of other charts that we've looked at in the last few weeks is that there's a lot of charts that look like they're setting up for potentially getting an ending diagonal down. And the difference there between a regular impulse and an ending diagonal is mostly the fact that all of the subwaves are ABC moves, rather than the waves 1, 3, and 5 being 5-wave moves. So we could see something more similar to this in Facebook, where this is an initial ABC down as an A wave, it gets a B wave bounce, and then gets a stronger C wave down for just wave 1 of that ending diagonal, and then gets another decent bounce as a wave 2, possibly when the market's getting another big B wave bounce, and then they continue to head down well into later this year and possibly easily stretching out into 2020. Let's move on to Apple. Apple down more than most of the other very large caps, nearly 6% today. It's in that in-between spot where it's not a clear impulse. It's a strong move down, but it's not clearly 5 waves completing. So easily sticking a B wave in here, and this is just an ABC move. So again, it could continue to stretch a little bit more and then get a 4th wave and a 5th wave to complete 5 waves down for the wave 1 and a much larger drop that's starting to build. Or this could be 3 waves down and it needs a bigger bounce, more than a 4, up towards the 200 to 205 region as a B wave, and then that ABC move completes a little bit larger wave 1, where the entire C wave, if we zoom out here to see what we're expecting, the entire C wave down that we're looking for in Apple is also an ending diagonal, similar to what we're looking at on Facebook. Let's jump over to Amazon. Amazon, we were pounding a table for quite a while about the concerns that we had of a larger top building in Amazon. And we have not made a new high since we've made the August, September highs that we were making. There was potential that this top was forming for much of 2018, but we were very good about tracking that extension at the smaller degrees. But every time we showed a smaller time frame chart with the next targets for extension, we wanted to continue to remind our followers and stock waves that there was significant potential for Apple to be making Amazon, to be making a primary degree wave 3 top, and needing to pull back, and easily possible to come all the way down to the 725 region as this primary wave 4. Certainly could hold closer to 900, but it is even possible that it heads all the way down towards the 400 region. We're going to be watching this, and this is one of the charts that we follow pretty much daily. But one of the cleanest examples of an ABC up for this larger orange B wave and a C wave that projects down into the end of the year. If this decided that it wanted to stretch a lot more, then possibly this could be all of the ABC for primary wave 4, trying to hold into the 900 to 700 region in here. But we would probably still be just only treating this as a B wave until it proved us otherwise, because there is still so much room underneath here from this massive extension that it got off of the 2014 and 2015 lows. Going on to Netflix. Netflix is one of the names that we could be a little bit more bullish on if we were to get a clean retrace as an ABC down. And so what's going to complicate things, there's potential here that Netflix is even starting an even larger cycle degree wave 4 that we had mentioned. It did not, like Amazon, it did not make a new high for what can count as that orange B wave. But there is more potential than most of the other FAANG names that this is a 5-wave move up in Netflix as wave 1 of yet another extension. And that extension could take Netflix up towards the 660 region, which is the next fib level for this larger cycle degree wave 3. So if we see a clear ABC down into the 279 region, that becomes a pretty good risk-reward setup to play for a possible 3rd wave up in that one more high OMH extension for one more high. It is possible, though, that an ABC move down to 279 is only the wave 1 of a similar ending diagonal for this orange C wave that we were looking at in some of those other FAANG names. So that's where the way that this moves up off of that 279, if it looks like it has 3 waves down, holding 279, the way that it moves up from there will be very, very telling. And that will be support for the potential for the move towards the 600 and 660 region, and a clear only corrective bounce that can't seem to get over the 340s would be a setup for a pretty big short from there, heading lower into the C, that orange C wave. Last is Google. Google was one of the names this dropped. This did follow the path that we were looking at in the equal weight average with getting the extension to a higher high. So it stopped being a B wave when it couldn't break down from the March highs. I'm going to delete that off of my chart. So this looks much more like this is the fifth wave up of the parentheses 5 of primary wave 3. So again, we're looking at the start of all of this primary wave 4. And we should be seeing an ABC move in the parentheses, and then inside that parentheses A, another ABC. Now, the difference here is that with the drop that Google had on earnings, this really looks like 5 waves down again. So if this is 5 waves down as just the A wave of parentheses A of our primary wave 4, our B wave could be a little bit more muted, because that would imply that this is going to be a sharper zigzag for the first drop of this A. And usually in a zigzag, after you have 5 waves down complete for the A wave, the B wave does not exceed the 38.2% retrace. So that would put a cap in the 1180s for the B wave if this is in fact a zigzag. So over 1188, and that's the first clue that maybe something else is going on that's more than just a B wave because of the strong impulsive look of this initial drop down. But a clear corrective retrace into that 1188 region would be a great setup for the next leg down, targeting the low 1000s. We'll go ahead and end there, and look forward to seeing you guys the next time.